Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with co-host James Mason. Good morning, James. How are you doing today?
Todd, good morning. I'm doing well. How are you?
I am doing well also. Some exciting things going on in the marketplace today.
Yeah. Some FOMC stuff today. It's the FOMC minutes being released at 2 p.m. We have a couple other economic reports that have been released already and will be continued to be released throughout the day as well.
Yeah, so really they're sharing news that we already know, but as you mentioned in previous conversations, that even though they release it officially in this context, that it still shakes the market up.
Yes. So I expect today to be a volatile day. And man, I'm ready for a pullback. I'm ready for a pullback in the market.
You're getting one.
I want a significant pullback.
I know, but you got a pre-market 4-point drop already in SPY. So that is a healthy step in the correct direction, or the right direction for this big.
I would love, with my puts, I would love to see a 40-point drop.
And you might get it. you might get it over the next 2 to 3 trading days if the market responds negatively to the FOMC meeting minutes and we get a little bump of bad news somewhere along the line here. We could easily see a 40-point drop by Tuesday.
No, we need a bump of good news for the market to drop.
Isn't that how that works? It's crazy.
Apparently.
It's like you're at the craps table and you roll the dice and you see a 7 and they're like, nope, that's a 6. What? No, that's a 7. Here, let me roll again. You roll an 11. Nope, that's a 9.
Yeah, and you look around the table and you're just like what's up with this guy? And everybody's looking at you like, no, you're the issue. Like, and you know. You're sitting there, you're reading the number. You're just like, no, I know I'm not crazy. Everybody else is.
Yeah, it is crazy. So, all right, give us a rundown on what's going on in the market real quick.
I just damn told you.
Well,
FOMC meetings.
All right. Oh, I thought you were going to give us a chart and talk about some stuff, but not a problem.
Oh, I mean, I can show you a chart.
No. Let's talk about something fun real quick then. Let's talk about Elon Musk. Elon Musk makes a joke about buying one of the most prominent names in the professional soccer world, Manchester United, and the stock jumps up 5% in pre-market, and then he says, "Oh, I'm joking." Oh my lord!
What's so crazy about that is like, who even watches soccer? You know,
I do.
Yeah, just messing with you.
I know. Our boy Ryan Saul watches soccer.
Yeah. Yeah, that's crazy. That like not like crazy, but like it's like funny that he made that joke about it. Yeah, man. Can you imagine having the influence of Elon Musk? Honestly,
I'll share this thought with our members that. Could you imagine having Elon Musk as like a second cousin, nephew, or an uncle, and you're at the family picnic and you're like, Elon, if I beat in cornhole, will you just send out one silly tweet about POAI?
Yeah. I'd go up to him like at the family reunion. I'd just be like, Elon, man, hey, I need you to send a tweet out for me. And he'd be like, what about predictive oncology? I'm like, yes.
Tuesday morning around 9:40 a.m.
Yes. And I'm like, I need it as high as I can. He'd be like, oh, so you want me to say POAI Dogecoin 69? I'm like, yes, say that. Whatever you have to say. All right. Let's be serious now. Let's talk about it. Yeah, we've been serious. Pretty much the big thing today, guys, is really watching out for that volatility in the market. The FOMC minutes going to be released at 2 p.m. and it's literally just the details from the FOMC meeting the last time when they decided to come up with the 75-point increase, but it should give us, when I say should, I say that loosely, but it should give us some insight on how they want to approach it in September. I really don't know, or I'm not really sure like what to expect. I mean, I expect overall bearish, but shit, I mean, I've been bearish the entire damn year so far on the market. But the reason why I say like I don't exactly like know what's going to happen is because one, I don't know. Two, like we had this month-long gap for August where they're not going to have an FOMC. So that month-long break, there's no telling what kind of verbiage that they actually put in those minutes. And if they really like laid on a lot of like heavy concern, it really could rattle the market. And that's what we're going to be looking for today when it happens. If you're trading short-term options, it's going to wreck it. I hate to say that, but I mean, it's just the way it is. When these events come through, they kill premiums. And that's what sucks about trading options. I can't tell you how many times, it's happened to me over the years. Just be careful, guys. It sucks. So that's what we need to watch out for today. I'm trying to think. There's another around 10 a.m. Eastern Standard Time. There's another report that's coming out. Let me see if I can try to find it.
From the feds?
To be honest with you, like I can't remember who it's coming out from. I'm trying to look it up. Hold on. Oh, okay. So the 10 a.m. one is the business inventory. I personally don't think that's going to be like a major catalyst in the market. Then again, like I could be wrong. Pretty much how this market works, like the algorithm, it's let me think of the best way I can try to explain this. And this is not going to be factual. This is more so an opinion. But the way it seems to work, I guess, is the proper way to say it, is that the Wall Street algorithms, for all the stuff that you think should make the market do whatever it's going to do, it's just going to play with you and not do that. And then the slightest thing that you wouldn't even expect always seems to just really shift the market into whatever direction. That's usually the wildest thing about like economic events or reports when they start to release them. So while I don't think that this business inventory report will be that significant, hey, you don't know. I mean, they could come out and say some wild stuff and it just like cause the market to just let loose. But actually, I do want to show a chart. Let's see. 1 second. Let me get it up for y'all.
Basically, what you said is that you're not expecting to, but you wouldn't be surprised if it does.
Yes.
Yeah.
So yesterday, this is actually what I want to talk about. Bam. When you start to see on a SPY, like candlesticks just like unloading like this. And when I say like this, like how quickly it just like dropped down. That is a sign of volatility starting to set in for like major drops. Now, it can also happen to the to the upside as well, like catching a bottom or whatnot. But the drops are more severe and significant than going up. That's why they people have the saying of take the stairs up and the elevator down. That's what that means. if you didn't know that. And this right here, like when I saw this to start happening yesterday, I literally tweeted, and I could be wrong, but I tweeted, it's here. Like seeing the SPY unload that quickly, that is a strong sign that there's a significant drop coming. Now, with that being said, I could be wrong. I mean, and the reason why I have to say that, not as any kind of like disclaimer, which I obviously have to say it as a disclaimer, but the true reason why I actually say that is because going back to what I just said about, the Wall Street algos, like for how you feel the market should go, man, it's just not going to do that shit. It's just going to hold it up. Just keep dragging it out to wear you down. And now this is not like some like psychology that you should be like using for yourself. Like, oh, they're just trying to wear me down, so I'm just going to be stubborn and not get out of this damn trade. No, like they'll wear you down by like wearing your damn trade down all the way to nothing. So approach that however you see fit. But like their job is to really get you to enter and exit trades that are not beneficial for you. It's that simple. Because you're not supposed to win at the end of the day, really. So yeah, really like that's just writing on the wall, and really we just need something to push it over the cliff. So maybe we'll get that today.
So really, the one thought is that how the market will respond to those FOMC meetings might be the nudge or the push to get it down over the cliff.
Mm-hmm. And then we're also sitting on top of so many just like bearish macro events. I mean, hell, the elephant in the room and has been in the room for a while is China. And that's not going to get any better anytime soon. This is going to get worse. Now, like when, I don't know. But what's very interesting is tomorrow, actually, there's over 200 companies that are supposed to, I don't want to say exactly, because I do need to look into it a little bit more. I don't know if they have to like have everything reported in for those audits, financial audits, the Chinese companies, to the U.S. regulators, or if it's like a more minor level of compliance. But basically, tomorrow is essentially like a deadline for over 200 Chinese companies. And I'm not going to like throw out any names, but over 200 Chinese companies to basically say, yeah, U.S. regulators, we're gonna be honest here and let you have access to our shit. Now, I don't think it's gonna happen at all like that. I think I would not be surprised, especially with everything that's going on with China. If there's not something equivalent to like a mass exodus of Chinese stocks leaving the U.S. exchanges and causing U.S. Investors to just hold bags of those ADRs. So tomorrow as well could be extremely significant. Like not necessarily maybe like tomorrow, but maybe like the following day. Once we start to see like writing on the wall. I mean, it would be some crap if basically a good way to retaliate against the United States is to hit them financially. I mean, if you're gonna make a move against any kind of country or even a company, you do it financially. I mean, that's really how everything works. Everything revolves around money. So if the Chinese, to basically thumb their nose at the United States, said, you know what, screw these assholes. We weren't going to let them have access anyways. So let's teach them a lesson. Do a mass exodus off of U.S. exchanges because, and this is what I researched last night, and this is why I'm talking about this. I didn't know the actual dollar amount. I mean, 200 some odd companies, that's a lot of companies, obviously. But really the thought never went through my mind. Oh, calculate how much market cap that could be. And Todd, did you know that could be potentially, if they all left the market, over $2.1 trillion of market cap?
Wow. That's
that's
a number you can't even wrap your head around.
Exactly. I did, and I was surprised when I came across that last night when I was researching some things. And I just came across that really just by chance, going through some stuff, and it just like hit me. I was like, oh shit, over $2 trillion would leave the market. You know how devastating that would be? Fuck. Like, I mean, any puts that I would have would turn out great, but man, I don't know. It might economically, if like all of those companies left, and hypothetically speaking, that's just how we're having to talk about this, but chances are it would not happen like that. It wouldn't be just an abrupt mass exodus, but like if it happened like that, like of course my puts would return good values, but it might be such a devastating economic impact that what I would lose and what everybody else in the world would lose would be so far greater that I don't think those puts would offset it. It's like over $2 trillion just leaving the stock market of all things. Like we ain't talking crypto. We're talking the stock market, like a shorter time frame for it to happen in throughout the day. Man, it would just be devastating.
It would be not recoverable in a short timeline.
No, like if you're in your retirement years, like you ain't retiring.
Correct.
I hate to say that. Like that's probably the God honest truth.
There's already people right now to that point with the drop in their 401ks that people were saying, you know what, maybe I shouldn't retire this year. My 401k is taking a 20, 25, 30% hit. Maybe I should work another year.
See, like honestly, like the smartest thing, like everybody is so caught upside down right now, like losing money in their 401ks. And really the smartest thing to do is just like not even have a 401k. I'm just kidding. You can't lose money if you don't have it. Like I'll be honest, like I've been getting so many vibes lately from like 07. It's unreal. And I don't know when it's gonna happen, but I really do feel like we're gonna have another deep recession like we had between 07 and 09.
Ugh,
that's
be
horrible.
That will be very disappointing for people who are over the age of 55, 65.
Yeah. Like I remember during that time, so like Maggie's family, they got hit hard by it. But there was a guy who I didn't really know him, but like I knew him obviously because I was having a conversation with him, but I was talking to him and he worked at a manufacturing facility, textiles actually. Had just got to the point where he could retire at 30 years. And I was just asking him just BS questions. And he was so proud to say like, yeah, I saved up $100,000. And I literally was thinking, now you got to think like this is like 07. But even then I was like $100,000 after 30 years, that's your retirement. And I was like, shit. And man, it was like 6 months later. I seen him again and just talking and everything. And I asked him, I said, oh man, I said, when are you retiring? And I honestly, I wasn't thinking. And he's like, I'm not. And I was like, why? He's like, man, my 401k got crushed. I lost 40% of it. And it all hit me. I was like, oh crap, man. 30 years of saving, and you in months, you lose 40% of it. That's sickening.
That is sickening. But that's the American dream.
It is.
I mean, it's what we've been taught and brainwashed early on. Get a job, work at this company for 20 years, 25 years, get your gold watch, get your retirement, have your house paid off.
Honestly, like, I don't believe in that, any of that. I never have. Like,
well, that's why you do what you do. That's why you're an entrepreneur. That's why you work 20-hour shifts in code and create algorithms for people to buy swing trade alerts. That's what drives you.
Yeah, but man.
All right, we're 6 minutes from the market.
All right, everybody. So overall, like, today is like bigger market stuff. I mean, I can't tell you what to do, but me personally, I plan on staying light until I have some momentum, and then I'll make my moves. So we appreciate y'all tuning in. Be careful, guys. Like, if you start to, like, it's so hard for me to explain what I'm about ready to explain, because I can tell you from experience that I can sit here all day and say, hey guys, don't get FOMO. Don't try to go all in. Don't like buy a shit ton of damn contracts. I can say that all day long, but man, I can't tell you how many times, like, I've even still done it. You know, I mean, it's hard. It doesn't matter what skill level you are. Anybody who tries to say, yeah, I don't get FOMO, I don't do that shit, they're a liar. There's people on Wall Street, man, they get that shit too. Like, when you start putting money into the equation of, like, damn, I need to make money for Christmas. You know, you start to think differently. Or it gets really bad when you're in a significant loss. You're like, shit, if I damn quadruple down right now, and if it goes up 25 cents, I can make all my money back and some. And then that bitch goes $1 against you. That's it. So FOMO is a real thing, guys. And based on my point is, when you start to feel FOMO, chances are what you feel so confident about is the opposite is probably going to happen.
Right.
Especially when you're dealing with options, guys. Like, options are so crazy, so weird. So trade safe, guys. Be careful. Macro events today, 2 p.m. today. Wall Street algos will start to kick on, I believe, and we'll just have to take it from there. So other than that, thank y'all for tuning in today, and I will catch y'all in the next one.